last class we had completed with what is management information system, what is management report, levels, sources of information, etc. So the next up topic for the chapter is performance analysis in private sector organization. So we need to consider four major things over here, that is liquidity ratios, profitability ratios, gearing ratios, and divisional performance management. Now already you would have studied in your one of your subjects called as management accounting, right? So there you would have completely done all your problems based on liquidity as well as profitability ratio, right? So we're going to check your the frequency of cash inflow or the easy convertibility into cash. That's what you call it as liquidity. Liquidity means easy convertibility into cash, right? So you would have studied about current ratio, inventory turnover ratio, or creditors turnover ratio, debt payment period, etc. So all these ratios you would have studied in order where you can analyze where is the source of cash inflow and outflow. And also we are talking about profitability ratios. That means you're directly checking the company's efficiency or profitability, correct? So here we are talking about gross profit ratio that is earned by the company annually, and net profit ratio after all your deductions, taxes, etc. And then we have something called as gearing ratio, right? That focuses on debt equity ratio, that is your capital structure. Remember, when you write your balance sheet, on the left side when you start with capital, right, you write with equity share capital, then borrowings you will write debenture, correct? So that ratio is what we are going to check here, debt equity ratio. And then we have the divisional performance management. Let's look into the meaning of divisional performance management. So divisionalization in general, it speaks about a situation where managers, in the businesses organizations are given a degree of autonomy over decision making. That is, they are given the authority to make a decision without the interference of senior management. So division means, the name itself says, you're dividing the entire organization into smaller functionalities or departments or branches, right? So each individual department head or manager is accountable for that particular department or branch. So all the decisions containing to that particular department or division will be taken up by the branch manager. Okay, so that's about the meaning of divisional performance management. Now let's understand what is the use of performance measure in order to control the divisional managers. Number one, profits. So how can we measure? It is through profits. Whether or not the organization is doing a good job or performing better, how do you measure it? Generally, it is by profits. If the company is making profits, we understand that companies are progressing or doing a good job in their industry. If the companies are facing loss, we understand the companies are not compatible or not competitive in the industry. So profits are the first measure, right, in order to analyze the performance of each branch or function. Second is return on investment, right? So we all are looking forward for whatever capital, right? If you are a shareholder, right, and you invest rupees 10,000 in a company, okay, what do you expect? A return, correct? A return on your investment. So another measure is over here, profit expressed as a percentage of divisional investment. So you have three divisions, A, B and C. So you are going to check what is the amount of return you're getting on the amount you have invested in the each division. So the third way is residual income. That means even above, let's say they had promised you 10% on your investment. Okay. Even after that 10%, right? If it is exceeding, then it becomes residual income. That is the net operating income that is earned by the investment center. So this income is the earning that is above the minimum target return. So when you earn this, you know that company is performing very efficient. Next we have transfer pricing. Now this pricing or the charge, right, is an internal charge. So you have division A, B, C, D, correct? So when division A is selling or an asset to division B, that is an internal sale or an internal purchase, right? So at what price will you be exchanging those assets will be called as transfer pricing. Okay, it is a price that one division charges another division. Okay, but remember, these both divisions or branches belong to one single company, right? So for what are they charging? For the goods or services supplied from one to another. Next, we have performance analysis for non-profit organization and the public sector. So let's understand what's a non-profit organization. As the name says, non-profit. That means these organizations focus on service, right? Providing service. It can be social service, it can be educational, as a trust, etc. Right? They include charities, hospitals, or giving educational services, any kind of service. So they're not focusing here on achieving profits. Their major objectives are what? Providing social service. Let's understand what are the problems faced when you need to assess the performance of such non-profit organization. Number one is these organization, that is non-profit organization, have a lot of objectives, right? They need to help financially, or they might want to help the handicapped, or they want to help the orphans, or they want to help the fatherless children to get educated, etc. They have a lot of objectives. So otherwise, for a normal profit making company, you know what is their objective, so you can naturally check their or assess their performance. But over here you have multiple objectives, so therefore it becomes a little bit challenging in order to assess performance. The second is the difficulty of measuring outputs. So an objective of the health service is obviously to make the sick people better, correct? Or give them the right medicine and treat them, correct? So we need to practice, or we need to measure the output, right? But the challenge is difficulty in measuring the output, because for hospitals there is one measure, for education institution there's another measure, and for a service industry there's another measure. So in non-profit organization, to measure the output, it's actually difficult, because one organization output cannot be compared with another organization's output. Third is your financial constraints. That is, your public sector organizations have limited control over the level of funding that they receive, correct? So all these non-profit organizations, or what we call as NGOs or charities, there is no permanent source of cash inflow for them, right? So it is difficult for them to achieve their objectives or meet the purpose of the organization. Next, we have political, legal, social considerations. So definitely the public will have a higher expectation from such organizations, right, than from private sector organization. So it is they're subject to greater scrutiny, or difficult to meet in terms of legal requirements, etc. So these are the four different problems that a non-profit organization will be facing. So with this, we complete our fourth unit, that is performance measurement and control, and we also complete the syllabus of performance management.